So basically, guys, it's just a short clip. This is on a 15 minutes time frame on gold. So this is just a minor way of actually getting just a small scalp on gold. So having this to know how to actually get an entry. Market came and accumulated a lot of money here, and like the new updates that's happening in the market fails to mitigate most times, and then before heading up just takes out liquidity and then start heading up. So this was it for me. It was the first approach I gave it, and after market mitigated on it, I had to break structure. And when it went and formed liquidity, that was when I entered. And then I was looking at this demand and this supply and this supply. Why this is minor? This caused the break of this structure, right? But it's not. It's a minor structure. This is the main structure. It's all of them are still minor structures, right? But what caused this is this. This can also be liquidity as well. Having this to be the last supply, but for me, this is not relevant. It will just react off it, and then it's liquidity. Like you see what is there. For me, it's liquidity. So that's why I will extend this candle here. It's showing you that there's a demand there, yes, but is the demand strong? I'm not very certain it's strong. So that's why I wait for market to tap from here. So and either here or here. So when it comes to the risk aspect of it, your risk should be the same. So let me have it that you're risking like 2%. So risk two to risk two from here down to this point. Like if it cuts you there and cuts you here, that's fine. Because I'm still bullish on all this till I see a good. So comes here, that is about 1 is to 12 or something here. So that's it. So currently market is respecting demand, like we see this current supply is being respected. So if you respect it and comes down to this point, so this was the cause of, okay, let me just delete this so you see clearly what I'm talking about. This was the cause of this break of structure. So now our entry is going to be off this candle, and when market comes there and mitigates off this candle and heads up. So I'm hoping to see market head up to this point first, second. So but when looking at this, imagine that we're entering here. This is about risk I'm taking. So let's say our risk here is about this. This is about, how many pips is this? This one goes. So we're just scalping. This is about 12 pips. So let me see. We want to make like 1 is to 3 from this. So it should be here. So minimum for every trade is 1 is to 3. So 1 is to 3 somewhere around here. Yes. So 1 is to 3 something. So So imagine you're making 1 is to 3. So let me see, you're trading with about 2% of your account. So 2% for 6, you're making 6% of your account. It means if it's 1%, so this has actually given us about 5%. If you're trading for a prop firm, already you've passed it already with these two trades, because this gives you 5%. Enter off here gives you about 3%, 5, 6, 7, 8. Yes, but if you miss this and you're left with 4%, fine. Wait for this. If you miss this, left with 3%, fine. But if it works out, you've passed the prop firm already. So that's why we are committed to just risk management, and that's what we teach. So this for gold. EU, AUD USD, the trade is not really moving like I wanted. I entered this trade here. This After this minor break of truth, I entered here and it's been breaking, going up. So if it comes back fine and takes me out, that's fine. But if it heads up to my TP, that's fine. But this is about 1:3. The same with this GBP USD. Same with this. This was demand that entered off here. So now I think market is going to react off. This is a minor rally base rally, and let's see what this is. Just a lower time frame, might not really get respected, but this is it. My TP should be around here. So that was this is about. So, and one thing is, when market goes at least 1:2 ratio, carry your stop loss and put it at break even. Or if it's not break even, you take partials. So this is about 1:26. So when the market was around here, it's break even for me, or taking partials, or let me say break even, fine. Put it here for break even, and even if it comes back, you're still in profit in trade. So, but 1:2, this is about 1:3. So this is 1:4. Now, so having 1:4, still trade. And then Euro USD, which didn't really give me a good sign to enter off. Yeah. So Euro is trying to tell me that this can also be liquidity as well to be wiped out. So that's why my TPs are not really so high, because market can decide to come back and clear this and mitigate properly, or keep heading down if it gets broken. So at least somewhere around here. But if it doesn't, fine, I'll keep trading. But the essence is to just have a proper risk management. At the end of the day, you're either out on break even, or you're not on loss, you're on profit, leaving the market. For those that understand this can actually be an accumulation, stationary test, right? I've forgotten all the terms. Phase B, spring, back to return to break structure, came back, last point of support, then went up to this point. So it's still coming back to this last point of support, because this is the major structure. Comes back to this point, I'll take a buy and head it up. Here I'll take break even, yes, and this is my final TP. Yeah, so let's see how it plays out. Just by watching this like a live trading, and remember that all these pairs correlate. Though gold is not really a good market when it comes to AUD and GBP, but GBP USD, AUD USD, Euro USD, they really correlate together. So, and this is almost time for New York. So since it's almost time for New York, let's go on a bigger time frame and check where the London started from. So this was 6:30. This was 8. So this was London. So imagine the London was here, went up. So this has broken London high or structure. So if it breaks it, it's gonna be a retracement as well, heading up, right? It's going to be a retracement heading up. But if market at New York tends to be here, it's and breaks this last supply, I hope to now start buying more and more up to this point, heading up. So goes to the same goes to this. So where is okay? This is 8 o'clock candle. Yes. at the dot, and the market comes back at this 8 o'clock candle. 8 o'clock took out liquidity from last, right? If I'm not correct. So let me put the indicator for, yeah, took out liquidity from last night. And if I cleared up and down liquidity here, up here, down here. So if this comes back to, it can actually break structure and still head back. So something like this. So head up, break this structure, come back to this point, then break the next structure. This might be what I'll be looking for to see market plays out. This on 30 minutes time from GBP USD. Let's see. Okay, this was, so I was hoping to see a retracement, and if it doesn't work out that way, fine. So let's see how market, their liquidity formed here, and which might take it out, then come back. But this is a full retracement. Sorry, this is a full mitigation, and for anything coming back below here, I take it as taking this down as liquidity. And when it takes this down liquidity, for me, it's like a break of structure, and I'll start looking for more sales. So going, because what's going to control all this is going to be dollar, and like I said, dollar is still falling. This was my analysis on dollar, and it's still falling until it gets to this point. So this is, for me, this is liquidity. And like I said, before I can actually say I'm taking my TP off from there, look at this. This is liquidity, and this can actually still be liquidity because I was waiting for market to break this, and it wasn't broken. It didn't break it. So trying to tell me that market might still be bearish on the dollar index. So if it's still falling, then euro will still be going high, GBP will still be going high, and that's it basically. So the more it goes down, the more other pairs goes up. And okay, let me just add up this to give a confirmation. Let me use Euro USD. So it's Euro USD. Oh, because it's on the lower time frame, it's gone so far. So this is Euro USD and it's still very far. Let me take it off. Unless I go to high time frame. Okay, that's when you see it more. Still gone very far. Anyways. So let me just leave this. Let me take it off. Take it off. So I want to see this happen. If it goes, if market respects it, or most times, like what's going happening currently in the market is that it will give you a demand, and at the end of the day, it will now come and take out that demand, break that demand, then start going up to give you a clear demand. But this hasn't given me a clear demand, anyways. But this is just part of the things I've been noticing the market to just come back, then start heading up. My economy reacts to something like this, do out of nowhere, retrace, then might be what's going on, comes back here, then head up to this point. So these are things that used to happen in the market recently, and I won't be surprised to see this happen another time, right? Because it happens since about last month. This has been going on in the market. I'm not really surprised to see how market is reacting, forming liquidity up and down. But we'll see how this market plays out. This is still going up. So let's see how it plays out. GBP USD. Okay, so it started off the place I marked. So take it out as liquidity as well. And then let's see how market goes out. So I'll give you guys an update when I'm done with this.